Hello, you are welcome once again to OA Accountancy Staff. We are still on the adjustments of final accounts of a sole proprietorship. So in today's video, we will begin with bad debt or irrecoverable debt and provision for doubtful debt, which is also known as allowance for irrecoverable debt. But if you haven't subscribed to this channel, I will urge you to kindly subscribe, like, comment and share for the benefit of others. Bad debt or irrecoverable debt are amounts owed but which cannot and will not be settled. Thus, they are debts which cannot be paid by the firm's debtors. Provisions, however, are amounts charged against profit to provide for any known costs, such as cost of depreciation, possible losses caused by bad debt, and so on. But the exact amount cannot be accurately determined. So when an organization sets an amount out of their profit to anticipate that a certain value of their trade receivables cannot be recovered, then we say that organization has provided for doubtful debts. Provisions are made in compliance with the prudence concept, and the prudence concept says that in preparing the final account, the accountant is forbidden to anticipate profits, but rather should provide for all possible losses. So organizations just make general provision without knowledge about the exact amount of trade receivables that cannot be recovered. So when an organization becomes certain that a particular debt or an amount owed by the debtors cannot be recovered, then we say bad debt has incurred or that particular debt has gone bad. So whenever bad debt incurs, there is a double entry that needs to be passed. And the double entry is that whenever bad debt incurs, so we say bad debt incurred or created when bad debt is incurred. When bad debt incurred or is created, then you need to debit the bad debt account and then you credit your trade debtors account. So whenever bad debt is incurred or is created, then it means you need to debit the bad debt account and then you credit the debtors account. Also, whenever a particular debt goes bad, then that particular debt needs to be written off from our books. So whenever bad debt incurs, that debt needs to be written off from our books. And in writing off bad debt, there is a double entry that needs to be passed. So the double entry is that so in writing off bad debt, you debit your profit or loss account and then you credit the bad debt or irrecoverable debt account. If you remember in our previous video, we said that items in the trial balance need to be treated once, whilst items in the additional information be treated twice. So whenever you see bad debt on the trial balance, it means that bad debt has already gone through the first double entry, remaining the second one, which is the bad debt written off. So in writing off bad debt, you debit your P&L account and thus you add that bad debt figure to indirect expenses in the statement of profit or loss account. By adding bad debt to indirect expenses in the P&L account, it means you have debited the profit or loss account. So that's the second treatment. Also, as we said earlier on, items in the additional information need to be treated twice. So whenever you see bad debt in the additional information, it means that bad debt has not gone through neither the first double entry nor the second one. So in treating bad debt that's in the additional information, you first need to subtract that value of bad debt from the debtors figure or the trade receivables. Then you again charge that bad debt as indirect expenses or you debit the P&L account. So the treatment of bad debt in the additional information is that you first subtract that value of bad debt in the additional information from your debtors figure. And we all know that debtors are current assets and they already have debit balance. So by subtracting that amount from the debtors figure, it means you are crediting the debtors account. So after subtracting or crediting the debtors account, then you add that bad debt figure to the indirect expenses in the trading profit or loss account. That's how bad debt in the additional information is treated. So let's take this to be our trial balance. Assuming on the trial balance, we have assuming on the trial balance, we have bad debt of 1,000 cedis and trade receivables of 10,000 cedis. So in treating this bad debt, because it is on the trial balance, it means it has already gone through the first double entry. So there is no need to subtract this bad debt again from the trade receivables figure, because the first double entry of bad debt is you credit the debtors account. So this debtors or trade receivables figure here is the adjusted or the final figure after we've subtracted the bad debt figure from it. So the treatment of this bad debt on the trial balance is that it will be added to indirect expenses in our trading profit or loss account. So let's take this to be our trading profit or loss account. Let's assuming this is our third column. And we have, let's say, gross profit of 15,000. Then we will say less indirect expenses. That's only if we do not have any other income. So we will come and we say, let's say, rent. We all know that indirect expenses are on the second column if only they do not have any adjustments. So this expenses figure, let's take it to be 150. Then this bad debt will come here. Bad debt of 1,000 cedis. Then we are done with the bad debt. It has been treated because we said items in the trial balance need to be treated once. So we've treated the bad debt and we are done with it. But if the bad debt were to be in the additional information, let's assume this was the question. So we do not have any bad debt here. But our additional information, AI to represent our additional information. One, it says bad debt of 100 cedis. So as we said earlier on, whenever the bad debt is in the additional information, it means it has not gone through neither the first double entry nor the second one. So its treatment is that it will first be subtracted from the trade receivables figure or the debtors figure. So after it has been subtracted from the trade receivables figure, then the second treatment is that it will be debited to P or L accounts, or it will be added to indirect expenses here. So when we come to the trading or profit or loss account, you just add the bad debt to indirect expenses as we've already done. So you clean it and make the amount 100. But when we go to the statement of financial position, after stating our trade receivables, we need to subtract the bad debt figure from the trade receivables before we can proceed. Also, kindly take note that provisions for doubtful debt or allowances for irrecoverable debt are always calculated on the trade receivables figure or the trade debtors figure. This is because the provision for doubtful debt are amounts set aside to assume that a certain value of the trade receivables cannot be recovered from our debtors. So that is why always the allowance for irrecoverable debt or provisions for doubtful debt are always calculated on the trade receivables figure. So assuming the additional information went on to include provisions for doubtful debt, let's assume the additional information too says that provision for doubtful debt or provision is 10%. Let's assume the additional information too went on to say that provision for bad debt or provision for doubtful debt is 10%. So as we already said, always provision for doubtful debt are calculated on trade receivables figure. But whenever bad debt is in the additional information, that bad debt figure needs to be subtracted from the trade receivables or the trade debtors figure before provision for doubtful debt are calculated on the remaining amount. So in this case, before we apply this 10% on this 10,000 figure, we need to take out this 100 cedis from the 10,000 cedis. So we will first take out this 100 cedis from the 10,000 cedis, remaining 9,900. So it is this 9,900 that our provision for doubtful debt can be calculated on, not the entire 10,000 cedis. But when bad debt is on the trial balance, there is no need to subtract that bad debt again from the trade receivables or debtors figure before we calculate our provision for doubtful debt. Provision for doubtful debt can come in about 3 different ways. The first one is you can have a question that only have provision for doubtful debt on the trial balance, but no provision for doubtful debt in the additional information. The second one is there can be a situation where provision for doubtful debt is only in the additional information, but no provision for doubtful debt on the trial balance. And the third one is when there is provision for doubtful debt on both the trial balance as well as the additional information. But kindly take note that always the provision for doubtful debt on the trial balance represents the previous year provision, whilst the provision for doubtful debt in the additional information represents the current year provision. So now let's try and create a table to see how each of them will be treated in our final accounts of a sole proprietorship. So let's call this to be type and this to be our trial balance. And additional information. And this will be the treatment. And this is our type 1. And we said the type 1 is when there is provision for doubtful debt only in the trial balance, but no provision for doubtful debt in the additional information. So let's use this to represent when there is provision for doubtful debt in the trial balance. So no provision for doubtful debt in the additional information. So how will provision for doubtful debt that's only in the trial balance be treated in our final accounts of a sole proprietorship? I know most people will treat provision for doubtful debt that's only on the trial balance as indirect expenses. That's they will debit the profit or loss account with the provision for doubtful debt that's on the trial balance. But the actual treatment of provision for doubtful debt that's only on the trial balance is that because the provision for doubtful debt that's on the trial balance represents the previous year provision, and we are not preparing the final accounts for the previous year but for the current year, then that provision for doubtful debt that's only on the trial balance will not be treated in our final accounts. So in treatment, we will say this will not be treated or it will be ignored. Because the provision for doubtful debt that's only on the trial balance means that in the current year that we are preparing the final accounts for, no provision for doubtful debt was made. So it shouldn't be treated at all and that it should be ignored. So we will say we will ignore provision for doubtful debt that's only on the trial balance, but no provision for doubtful debt in the additional information. And the second type is when there is provision for doubtful debt in the additional information, but no provision for doubtful debt in the trial balance. Because we said earlier on that the provision for doubtful debt that's in the additional information represents the current year provision, then it must be treated. And because this provision for doubtful debt is in the additional information, as we said earlier on, items in the additional information should be treated twice. So this provision for doubtful debt that's in the additional information will be treated twice. So the first treatment of provision for doubtful debt that's in the additional information is that provision for doubtful debt in the additional information will be debited to the profit or loss account, or you can say it will be added to indirect expenses in our statement of profit or loss account. So let's take this to be our trial balance. Assuming on our trial balance we have trade receivables of, let's say, 10,000 cedis. These are debit side and these are credit side. And in the additional information, or let's say on the trial balance, we again have bad debt of 100. And in the additional information, we have provision for doubtful debt. %10. So as discussed earlier on, because this bad debt is on the trial balance but not in the additional information, then we can just go straight to calculate our 10% provision for doubtful debt on the trade receivables. But if the bad debt were to be in the additional information, then it means this 10% provision for doubtful debt cannot be calculated on the whole 10,000 cedis of trade receivables. But before we calculate our 10% provision for doubtful debt, we need to take out the bad debt that's in the additional information from our trade receivables or trade debtors figure before we can calculate the provision for doubtful debt on the remaining value. So because this bad debt is on the trial balance, then it means we can calculate our provision for doubtful debt on the whole 10,000 cedis. So in calculating the provision for doubtful debt, 10% of 10,000 cedis will give you 1,000 cedis. So it means in the current year, the provision for doubtful debt is 1,000 cedis. So provision for doubtful debt is 1,000 cedis. The 10% is equal to 1,000 cedis. So we said that the first treatment of provision for doubtful debt that's in the additional information is that the provision for doubtful debt will be debited to profit or loss account, or it will be added to indirect expenses in the statement of profit or loss account. So let's take this to be our statement of profit or loss account. Assuming we have our gross profit here of 10,000 cedis. Then we will see less indirect expenses. And you will bring provision for doubtful debt of 1,000 cedis, if that's the only indirect expenses in the question. So you take out this provision for doubtful debt of 1,000 cedis from the gross profit to get our net profit or loss. So as we said earlier on, the provision for doubtful debt that's in the additional information's first treatment is that it will be added to indirect expenses, or it will be debited to profit or loss account. And the second treatment of provision for doubtful debt that's in the additional information is that the value of provision for doubtful debt in the additional information will be subtracted from trade debtors or trade receivables figure in our statement of financial position. So in listing your current assets, right after you've listed your trade receivables or trade debtors figure, then it means you need to take out that provision for doubtful debt figure in the additional information from the trade debtors or trade receivables figure in the statement of financial position. The first treatment is that it will be added to indirect expenses. Indirect expenses in the statement of profit or loss accounts. Or you can just say, or it will be debited to profit or loss account. Profit or loss account. That's the first treatment of provision for doubtful debt in the additional information. And as we said, the second treatment is that it will be subtracted from trade receivables figure. It will be subtracted from trade receivables figure in the balance sheet. In the balance sheet or statement of financial position. So now let's move on to the type 3 of provision for doubtful debt. And the type 3 is when there is provision for doubtful debt in the trial balance as well as the additional information. So as we said, the provision for doubtful debt that's on the trial balance represents the previous year provision. Provision for doubtful debt that's on the trial balance, that's the previous year provision, is only there for comparison. So when there is provision for doubtful debt on the trial balance as well as the additional information, then it means that after you've calculated the provision for doubtful debt in the additional information, then you compare the current year provision or the provision for doubtful debt in the additional information to the previous year provision or the provision for doubtful debt on the trial balance to see if there is an increase or decrease in the provision. There can only be an increase in the provision when the current year provision or the provision for doubtful debt in the additional information is more than the one on the trial balance or the previous year provision. Also, there can only be a decrease in the provision for doubtful debt when the previous year provision or the provision for doubtful debt on the trial balance is more than the current year provision or the provision for doubtful debt in the additional information. So after you've realized that that difference in the provision for doubtful debt is an increase, then that difference will be treated or added to indirect expenses in the statement of profit or loss account. When there is provision for doubtful debt on the trial balance as well as the additional information, the one that will be treated in the trading and profit or loss account or the statement of profit or loss account is the difference. Thus, after you've compared the previous year provision to the current year provision, that difference is the one that will be treated in the statement of profit or loss account, not the current year provision nor the previous year provision. So when the difference is an increase, then that difference will be treated as indirect expenses. But when that difference is a decrease, then that difference will be treated as other income, and thus it will be added to gross profits in the trading account. So that's the first treatment of provision for doubtful debt. That's both on the trial balance as well as the additional information. So let's take this to be our trial balance. Debtors. And the additional information is saying that provision is 10%. So let's take this to be our trial balance. So on the trial balance, we have provision for doubtful debt of 100 cedis, and we have trade debtors or trade receivables of 10,000 cedis. And in the additional information, we have provision for doubtful debt or provision for bad debt to be 10%. So since we do not have any bad debt in the additional information, then it means we can calculate our provision for bad debt straight on the whole 10,000 cedis. So in calculating the provision for doubtful debt, that's the 10% of 10,000 cedis will give us 1,000 cedis. So this means that the current year provision or the provision for doubtful debt in the additional information is 1,000 cedis, whilst the provision for doubtful debt on the trial balance is 100 cedis. So we are saying that after calculating the provision for doubtful debt in the additional information, then you compare the provision for doubtful debt in the additional information to the one on the trial balance to see if the one in the additional information is more than the one on the trial balance. If the one in the additional information is more than the one on the trial balance, then we say there is an increase in provision for doubtful debt. So in this case, the 1,000 cedis in the additional information is more than the 100 cedis on the trial balance. So the difference will give us 900 cedis. So this means that there is an increase in provision for doubtful debt of 900 cedis. So this increase will be treated as indirect expenses, or we can say it will be added to indirect expenses in the statement of profit or loss account. When you get to the indirect section of the statement of profit or loss account, then you include your increase in provision for doubtful debt to the indirect expenses. But if the provision for doubtful debt in the additional information were to be lesser than the one on the trial balance, then the result would have been decrease in provision for doubtful debt. So when there is decrease in provision for doubtful debt, then that decrease or that difference will be added to gross profit as other income. So after ascertaining your gross profit, then you add the decrease in provision for doubtful debt to your gross profit as other income. So that's the first treatment. You check to see if the difference between the previous year and the current year is an increase or decrease. If the difference is an increase, that difference, not the current year provision nor the previous year provision, the difference will be treated as indirect expenses. But if the difference is a decrease, then that difference will be added to gross profit, and thus it will be treated as other income. And the second treatment is that because we said items in the additional information should be treated twice, whilst items on the trial balance should be treated once, then it means we are done with the provision for doubtful debt on the trial balance. It's now left with the second treatment of the provision for doubtful debt in the additional information. So the second treatment of the type 3 provision for doubtful debt is that the current year provision or the provision for doubtful debt in the additional information will be subtracted from our trade debtors or trade receivables figure in the statement of financial position. The current year provision or the provision for doubtful debt in the additional information, not the difference nor the previous year provision. When you go to the statement of financial position, it is the current year provision, not the difference. The difference will be treated in the statement of profit or loss account, whilst the current year provision or the provision for doubtful debt in the additional information will be treated in the balance sheet or statement of financial position. Kindly take note of that. So that's the second treatment of the provision for doubtful debt, that's on the trial balance as well as the additional information. Okay, so now we are moving on to drawings. Drawings are said to happen when the proprietor or the owner of the organization withdraws part of the business asset for personal use. It could be stock, cash, or any asset at all. So we will emphasize on cash and stock drawings. Cash drawings occurs when the proprietor of the organization withdraws part of the firm's cash for personal use. Stock drawings, on the other hand, also occurs when the proprietor or the owner of the organization withdraws part of the firm's stock or goods for personal use. So we are going to look at how each of them will be treated in the final accounts of a sole proprietorship. And under drawings, we will look at stock drawings and cash drawings. So under drawings too, drawings is dicey. There could be a situation where drawings is only on the trial balance but no drawings in the additional information. And as we already know, items in the trial balance need to be treated once. So whenever there is drawings only in the trial balance but no drawings in the additional information, each treatment is that it will be subtracted from capital in the statement of financial position. That's when you get to the finance by section, you just say finance by capital, then you less drawings from it. Also, there could be a situation where there is drawings only in the additional information but no drawings in the trial balance. So the drawings in the additional information could either be stock drawings or cash drawings. Also, there can be a situation where the drawings that's in the additional information is silent, whether it is stock drawings or cash drawings. So in that case, it is assumed to be a cash drawing. So when the question does not specify whether the drawings in the additional information is a stock drawing or cash drawing, it is assumed to be a cash drawing. So it should be treated as a cash drawings. So when there is drawings only in the additional information and you realize that that drawings is stock drawings, each treatment is that the value of the stock drawings in the additional information first will be subtracted from purchases in the trading account. This is because purchases is a name given to goods bought with the intention for sale. So whenever part of these goods are used for any other purpose, then that value of the goods that has been used for that other purpose needs to be subtracted from the purchases. So when you get to the cost of sales section of the trading account, you just say opening stock, purchases, then you less the stock drawings from it. That's the first treatment. And as we said earlier on, items in the additional information need to be treated twice. So the second treatment is that drawings in the additional information will be subtracted from capital in the statement of financial position. Also, when the drawings in the additional information is cash drawings, its first treatment is that it will first be subtracted from cash in the statement of financial position. That's when you get to the current asset column of the statement of financial position, you just write cash and then you write less cash drawings. Or you can also choose to open a cash account and then you adjust it in that cash account. So you can open an account like this, cash account, and the value of cash on the trial balance will be your balance BD. So you bring that value here, then the cash drawings will be on the credit side. So you say drawings then you bring the value here, and then you close it. So the balance CD will be here, and the balance BD will be here. So if you decide to open an adjusted cash account, this balance BD will be the one that will be sent to the statement of financial position. So in listing your current assets, you only say cash, then you bring this figure. When you decide to go by this, after writing this adjusted cash amount, there is no need to bring the cash drawings again in the statement of financial position. So it's either you state your cash like this, then you say cash drawings, then you take it out in the statement of financial position, or you open an account and you adjust it in the account, then you send the final amount or the final figure to the statement of financial position. Also, there can be a situation where there is drawings already in the trial balance, and at the same time there is drawings in the additional information. So in this case, you decide whether that drawings in the additional information is a cash drawings or a stock drawings. If the drawings in the additional information is a cash drawings, then its first treatment is that it will first be subtracted from cash in the statement of financial position. If it is stock drawings, that figure of stock drawings will first be subtracted from purchases in the trading accounts. And the second treatment is that that value of drawings in the additional information will be added to the drawings in the trial balance, and the total drawings figure will be subtracted from capital in the statement of financial position or the balance sheet. So these are the various treatments of drawings. This will be the end of this video, but if you haven't subscribed to this channel, I will entreat you to kindly subscribe and also share for the benefit of others. Until we meet again, it is bye for now.